Also, on the local front, the local currency and the local bourse continue to surrender ground amid mounting anxiety over the prolonged aggression between the U.S. and Iran. Our Kim Do-yeon has the closing numbers and more.
South Korea's financial markets closed lower Monday, reeling 1 month into Operation Epic Fury in the Middle East. The benchmark KOSPI ended the session at 5,277.30, dropping nearly 3% from the previous trading day. The index has taken a severe hit since the conflict began. Just before the operation launched on February 27th, the KOSPI closed at 6,244.13. Monday's close represents a steep decline of roughly 15% over the past 4 weeks. Foreign investors have been the primary drivers of this downward trend, dumping domestic shares amid a rapid flight from risk assets. This flight to safety is also heavily impacting the South Korean currency. The won closed Monday at 1,515.71 against the US dollar. The exchange rate was already facing upward pressure earlier this year, closing at 1,485 won before the war started. However, the onset of the conflict acted as a major catalyst, rapidly pushing the rate past the psychological defense line of 1,500 won. Because crude oil is universally priced and traded in greenbacks, surging energy prices naturally drive up the global demand for the US dollar. This sustained currency depreciation comes as the newly nominated Bank of Korea Governor Shin Hyun-sung returned to Seoul earlier Monday, having been staying in Zurich, Switzerland. He faces immediate pressure to stabilize the financial markets. However, experts point out that the central bank's policy options may be limited as the currency's weakness is not solely driven by external geopolitical shocks.
Even before the Middle East situation exerted its influence, the exchange rate had already climbed to the high 1400s. That underlying rise is a reaction to domestic economic weakness and the persistent outflow of capital toward U.S. stock investments. The push past 1500 is linked to the Middle East war, but the initial climb was driven by domestic factors.
Investors are waiting to see if the incoming BOK chief will prioritize macro-prudential measures to manage capital outflows or adjust interest rates. Kim Do-yeon, Arirang News.